Welcome to Illuminati Silver. We tell you the truth about silver. Today is Sunday, the 10th of September 2023, and yesterday we published our gold and silver weekly update. Today's video is really a repeat of that, just under a different thumbnail and header, in case you missed yesterday's update. Last week we saw gold and silver prices fall, but this week there's some potentially exciting economic news due to be announced. What is it? Well, let's take a look. First of all, just a quick reminder that we've set up a second channel entitled Finances Do Matter with over 150 videos, and we cover a whole range of financial topics. We've placed a link in the description box below and also in the comment section for those who've not yet joined. Meanwhile, going back to last week and what we expect to happen this coming week, well, gold fell $21, falling from $1,940 to $1,919, having hit a high of $1,946 and a low of $1,915. A fall of just 1%, not too concerning to be frank. In sterling terms, gold finished the week at £1,540, that's down a pound. And in euros, it was down €7 at 1,794 euros. Silver fell $1.25, falling from $24.19 to $22.94, having hit a high of $24.31 and a low of $22.86, a fall of 5.2%. In sterling terms, it's down 82 pence at £18.42. And in euros, it's down 0.98 euros, virtually €1, at 21.50 euros. The gold to silver ratio rose from 80.2 to 1 to 83.6 to 1. The difference between gold's high and low was $31. Doesn't seem to be that high of late. And the difference between silver's high and low was $1.45. And we're having a reasonable oscillation in silver. Now, this is what we said last week concerning our forecast. We envisage gold will trade between 1900 and 1980, which it did quite comfortably. Silver, we said, would oscillate between 23.50 and 25.50, with 23 to 26 as outliers. It did, in fact, close just below the bottom of our outlier range by 6 cents. Looking at other financials, Bitcoin's up $69 at $25,856. Equities were broadly lower except for the FTSE, with the Dow Jones down 261 at 34,576, the S&P 500 down 58 at 4,457, and the Nasdaq down 270 points at 13,761. The FTSE 100, though, was up 14 points on the week at 7,478. More irritating, annoying, and worrying, oils were also higher. Brent crude closed up $2.10 at $90.65. Yes, it's hit that $90 mark, and pundits are stating it could go to $100. That's not going to help inflation. And WTI crude closed at $87.51. That's up $1.96 on the week. The dollar index stands at 105.09. That's up 0.83 points on the week. Now, in terms of economic data last week, PMIs were more or less close to expectations. Jobless claims were lower than expected by 14,000, and consumer credit for July rose by $10.4 billion. Now, it's this coming week that's important because although we have no data announced Monday, Tuesday, we then have the crucial CPI figures on Wednesday for August. Markets are expecting CPI at 0.6% for the month and core CPI at 0.2%. This would cause year-over-year CPI to stand at 3.6 and core year-over-year CPI at 4.3, some 0.4% lower than the previous month. This could happen, but with oil prices continuing to rise, not quite so sure. On Thursday, we have the Producer Price Index and US retail sales, also both important data. And then on Friday, we have US import prices and industrial production for August. So where does this leave us in relation to gold and silver? Well, we have the FOMC of the Federal Reserve making their announcement on interest rates on Wednesday, the 20th of September. So that's a week next Wednesday. The CPI and retail figures are crucial for their decision, though we suspect at this stage, based on previous announcements, they may try and wait another month or so before raising rates again. However, if inflation is higher than expected, then they may have little choice but to raise it by 25 basis points. Gold met resistance at 1930 and faced a sharp reversal, finding support at $1,917. Technical analysts will advise that it's showing a bearish inverted hammer candlestick pattern. How's that for a mouthful? The 200-day line and 61.8% Fibonacci retracement level both lie at 1,910 and 11 respectively, and if this is breached, we have psychological support at $1,900. Resistance rests at 1930 and various points up to 1950, which in itself is a psychological barrier. Silver is moving to strong support at the 2225 to 2250 level. There could be resistance at the 200-week EMA of $23, and if inflation falls drastically, though, taking the other approach, we could see silver propelled towards $24 rather quickly, with an ultimate outside limit, not going to happen this week, but ultimate of $25.50, which is the peak of the recent consolidation range. Our overall forecast bottom is $20, but inflation will have to rise for that low level to be reached. Can never be ruled out, but there's a pretty strong floor at that 22.25 level and 22 beneath it. The key is the CPI data and US retail sales, and then the Fed's decision the following week. So, with this in mind, we're lowering our forecast slightly for gold to trade between $1,870 and $1,950, with $1,850 to $1,975 as outliers. Silver will oscillate broadly between $22 and $24, with $21.50 to $25 as outliers. But if the inflation figures are higher than anticipated, we may even go down between $21 and $21.50, but they would have to be higher in our view. What do you think? Do share your thoughts. Meanwhile, we'd appreciate it if you give this video a thumbs up, subscribe and press the bell sign. Also, don't forget, please click the link to Finances Do Matter. And all that remains is for us to wish you a safe, enjoyable weekend, and as always, a prosperous week ahead.